What's up guys, and welcome back to Wall Street Millennial. On this channel and podcast, we cover everything related to stocks and investing. If you're watching this channel, chances are that you invest in the stock market. And if you invest in stocks, chances are that 2022 has been a brutal year for you. But it's important to know that if you're in the red this year, you're not alone. Even most hedge funds haven't been able to avoid painful losses. So this week, we're going back to the Wall Street Bets forum to take a look at some of the biggest losses that our fellow traders have posted, so that we can all feel a little less alone. But before we dive in, make sure you've signed up for our daily newsletter at wallstreetmillennial.com/newsletter. It's delivered straight to your email inbox at 5 a.m. every morning of the trading week, and has everything you need to know before taking on the day. The top 3 to 5 stories in the markets each day, expertly analyzed and distilled into a short 3-minute read, so you know the things that matter most for your money. In just a few minutes a day, you can prepare yourself with all the market due diligence that we perform for you. And the best part is, it's completely free. Go to wallstreetmillennial.com/newsletter or click the link in the description below to put your email on the mailing list and start receiving the newsletter today. First up, we have an E-Trade investor who lost an astounding amount of money this year. On various trades on tech stocks, meme stocks, and SPY, he's lost a grand total of $421,000, and that's just year to date. Partially offset by some other trades, his biggest losers were trades on SPY, Corsair, and GameStop, collectively losing over $600,000 from those 3 companies alone. Part of the reason for the magnitude of the loss is undoubtedly the use of options. The trader says that 90% of his trades were options trades, which magnified his losses. Corsair was his biggest single stock trade, losing him just over $120,000. It's one of the unprofitable tech companies that went public in 2021, and has since lost over 3/4 of its value in almost a straight line down. But perhaps even more interestingly, his 5th biggest loser is USO, the US oil ETF. Since the Ukraine war began, oil has been on a huge bull run. In the last year, the USO ETF is up about 23%. Yet our friend managed to lose $16,000 on it. How would you like to lose $16,000 on an ETF that's benefited from a massive global bull market? This just shows that no matter how good your investing acumen is, using options is a risky game. Options can turn a directionally correct investment into a money furnace if you don't get the timing just right. Better luck next time. Now let's take a look at someone who's lost 99.9% of their once great $46,000 portfolio. Before 2021, Cuppa Jones didn't do much trading, but in 2021, he immediately started losing huge amounts of money. By this past August, he was down to $25,000, not too bad considering the broader market. Then he made his fatal mistake. He got impatient and greedy. He got a small taste of victory with AMC in their early days and tried to make back his losses with options. In early September, his account went from a still decent $32,000 all the way down to $7,000, a 75% loss. Another week later, and he's down to just $150. Now that he's out of the real trading game, for the past couple weeks he's been simulating his trades in real time. He's writing down what trades he would do if he had any money left at the beginning of each trading day, then at the end of the day seeing if those trades would have made money. So far, even when he's made the right call directionally, the implied volatility decay of options has made his trades unprofitable. Better to lose theoretical trades than real trades. Next up, we have hopelessdjan, who has seen his portfolio go down so far that he is now in a negative $50,000 cash position due to losses on margin. And his losses have been both steep and consistent for over a year. After peaking in February of 2021 at over $350,000, his portfolio value has been on a steady trajectory downward. His account now holds just $67,000, a loss of more than 4/5 of his original portfolio. He made these losses by taking out margin to buy unprofitable growth stocks, including by buying into the SPAC mania that unraveled over the past year. The margin caused him to be down even more than the broader SPAC index, which is down about 75% in the same period. But the trajectory of the stock price performance is still similar. The commenters immediately light him up for using so much margin. Suggestion Dude, for example, says that he should have just taken out $250,000 of his hard-earned money and used the remaining $100,000 for YOLOs instead of risking the whole $350,000. But the trader responds by saying the reason that he ended up in such a big hole is that every time his portfolio went down, he would think, no point in selling now. Only when he holds a stock to a near total loss does he ever throw in the towel and admit that he's not going to make the money back. His experience should show all of us that if you risk everything on a speculative stock, especially if you're using margin, you have to be prepared to lose it all. Because the overall stock market has been so disastrous since the beginning of 2022, you might think that a surefire way to make money is to bet against the market. And that's exactly what user YuraJik did on Wednesday, September 28, but the strategy backfired. And it ended up costing them $91,000, or just over half of their portfolio value in a single day. They held puts on the Spider S&P 500 ETF, with a strike price of $355 expiring 1.5 weeks out. SPY was trading at about $363 per share, within striking distance of $355, at which point the puts would turn in the money. But instead of going down like the market had done 6 days in a row up until that point, SPY rallied 2% to $370 per share. Although that's still not far from the $355 strike price, there's only a week and a half until the puts expired. It also broke a downtrend in the market that may have caused option traders to lose faith in the profitability of out-of-the-money SPY puts. This shows a brutal reality of option trading. You can see a market trend going the opposite direction of your positions, and then when you finally decide to reverse course and go with the trend itself reverses. It happens to everyone. If you decide to trade options, especially with thousands of dollars on the line, you have to be prepared to take this kind of pain. Next, we have an absolutely massive $116,000 single day loss by user SirJackalot. But aside from the enormous 6-digit loss, the more incredible part of this post is that it was only a 1.6% loss. In fact, this $116,000 loss brought the trader's account balance from $7.1 million to just under $7 million. That's why he's saying he's no longer a 7 millionaire, the catalyst for making this post. About a month ago, the same user made a post explaining how his $7 million portfolio first came to be. He was 22 and made his money by going all in on the epic GameStop and AMC short squeeze of 2021. He got lucky with call options and ended up with a $6 million net worth. Now he has all of his money split 50-50 in 2 Vanguard ETFs, a technology ETF VGT and the S&P 500 ETF VOO. While having $6.99 million in your brokerage account is not a bad place to be, this goes to show that the size of your losses are all relative. For most ordinary people, a $116,000 loss in one day would be absolutely devastating. One commenter says, quote, "Now you know how the rest of us feel, except you still have $6,985,000 left." It's easy to feel like your own losses are huge and you're left with nothing in your portfolio. But whatever gains or losses you are incurring, just know that there's always someone who would look at your portfolio in the same way that we look at this guy's portfolio. Finally, let's take a look at someone who's lost $27,000 out of a $29,000 portfolio. Robinhood trader Bubbly Cartoonist lost all of that money in pretty much a straight line down, with almost no time period in his trading history when he was up at all. He lost his money by shorting Tesla and longing AMC. Even after a rough 2022, Tesla is still one of the best market performers of the last several years. Shorting Tesla would have lost you a lot of money. Meanwhile, longing AMC after its short squeeze in 2021 would have been even more disastrous. It's bled out from $60 a share at its peak to just $8 today. Shorting a stock that went up and longing a stock that went down is a recipe for losing 93% of your portfolio. But things are looking a little better for him recently. He's decided to bet against the market and volatility with puts, specifically by selling less than 1 week till expiration puts on the Nasdaq 100 QQQ ETF. The very next day, the markets rallied, putting the puts that he wrote in strong likelihood of expiring worthless. By selling options, your upside is limited, but it's still a good start towards making back some of those crippling losses that he's already incurred. Alright guys, that wraps it up for this video. What do you think about these traders' losses? In the face of huge market losses, does it help to know that you're not alone? Let us know in the comments section below. Also, don't forget to subscribe to the Wall Street Millennial daily business and finance email newsletter at wallstreetmillennial.com/newsletter. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.